Hey everyone, Ian King here, editor at Smart Profits Daily with your weekly market insights webinar. And before we get into it this week, I just want to remind you to please subscribe to our video channel, click that subscribe button below. And if you like the content, if you like what we have to say, please give us a like, hit that thumbs up button because it helps share our content with other viewers just like you. Now, joining me today, once again, I have my colleague and friend, Jeff Yastine, editor of Total Wealth Insider. Jeff, have you stocked up on your toilet paper and paper towels yet?
You know, it's one of those things you want to make a joke about, but yet it's not a joking matter, except that, you know, perhaps people have taken it way to the extreme regarding things like toilet paper and bottled water, neither of which, you know, you're going to need that much of, considering how much was pulled off the shelves in the last week or so. But yeah, we're fully stocked up. We're in place. My son is off from school for the next next 4 weeks, 5 weeks if you include a spring break. So yeah, we're set. How about you?
Yeah, we're set. I stocked up about a week ago, but you know, I know exactly what you're saying. And last night, I got to tell you, I had that kind of knot in my throat that I haven't experienced since that Sunday night before Lehman went under. But this time, it's not concerning really everyone's wealth, more about everyone's health. And I feel like, you know, the stock market right now is doing crazy gyrations and a lot of investors are getting hurt. But I think the most important thing is really to mitigate the spread of the disease. Everyone should be on some form of social isolation. If you don't have to go anywhere, stock up on groceries, you know, limit group activities to small numbers. And I think that's really like the only way we're going to get through this at this point.
Absolutely. The sooner we do that, the sooner, as you said, we will get through this and get back to some sense of normalcy, and we can see what the stock market will do, you know, in those you know, weeks and months after we get through, you know, I'm calling it peak virus, if you will.
Yeah, and I saw some reports that said maybe peak virus happens in April. And what I'm looking for as an investor is, and you know, not to minimize the number of people that are sick or deaths, but eventually we'll see what happened in China where the number of daily cases starts to decrease. So even the total number continues to go up. Instead of having 1,000 or 2,000 new reported cases per day, it'll start dropping to, you know, in the hundreds. And right now in China, I think there are under 100 new cases reported per day, which is a positive sign that, you know, there's an eventual end to this, even though there's going to be a lot of pain and suffering for the next couple of months here in the United States.
Yeah, that's absolutely correct, Ian. And I have to tell you, I almost feel like we may not be at peak virus in terms of the actual infections that you know are unfortunately going on in our country, but I think we're approaching peak virus in terms of the fear. And you know, these things, as a former, you know, business journalist, I've seen how this stuff happens, although obviously not at the magnitude we're experiencing it right now. But these things, and you know, you flip on the news and it leaves you feeling horrendous. And so of course people want to just sell and end the pain. But I think the key is it's going to end, I think, pretty quickly. And I also feel like it's going to be one of those deals where very subtly, just like we saw in China, it will move off of the front pages because the media will have sort of moved on to worrying about other things like the recovery. The markets always look forward. They always anticipate.
And that brings up a great point because I read a report from Goldman Sachs over the weekend, and their economists right now are looking for a 5% drop in second quarter growth. But that's the bad news. The good news is they see a V-shaped recovery, meaning that growth will bounce again in the third and fourth quarter. They're looking for 3% growth in Q3, and that's up from their prediction of 1%, and 4% growth in Q4, and that's up from 2.25%. And you know, looking at that, I think there's going to be a lot of debate as to whether or not the economy is going into a prolonged recession, or are we going to see something like we saw, you know, in the early 2000s, or are we going to see a quick recovery? And I know stocks took a long time after 2009 to fully recover, but really in 2009, the market had a great year. So I don't know, what do you think about that? Do you think that this is going to be something that's just temporary for a couple months, or are we going to be heading into a long series of layoffs and job losses and contracting economic growth.
Yeah, Ian, I have a fairly bullish view on these things. I think it is going to be temporary. I don't think it's going to be as bad as people think, in part because of the actions of the Fed, and we'll talk about that in a moment here. But also because think about how much sort of pre-ordering, how much warning we've had, and corporate America has had, that this is coming. Maybe not to the extremes that we're seeing now, but really after the past month, there's a lot of purchasing managers who've had some chance to see what's over the horizon and have been likely ordering more supplies to come in, So, and of course, we're seeing that on the local level with the consumer goods that people are buying. So, in some ways, some of the impact or the lag as people have stay out of stores for the next number of weeks may be compensated by the fact that they've spent more time in the stores over the last 2 or 3 weeks buying a lot of essentials that they otherwise wouldn't stock up on nearly so much.
I think you might be right about that. I've also read some earnings reports recently, especially in the telecom sector, that they haven't really seen much supply chain disruptions. I know we spoke a couple weeks ago about some auto companies having supply chain disruptions, but not so much in the smaller electronics category. One thing that I wanted to note, something that you just brought up, is that we're seeing unprecedented monetary policy right now. The Fed last night cut rates to 0, and they also reinitiated the quantitative easing program where they're going to start buying back government bonds and mortgages from banks, giving more reserves to the banks, flushing them with capital. Historically, we've seen this drive the market higher and reflate asset prices, and people are really worried if the Fed really, used its last bullet. What's your thought on that? And do you think that we're going to see the same type of kind of market recovery we've seen before when the Fed institutes another round of quantitative easing, or you think the Fed has lost its luster?
No, I think that what we'll see here is sort of a bottoming out, which I tend to feel like is actually happening like right now. I wouldn't doubt that we see maybe a bounce and then a retest, a month, 5 weeks from now, something like that. But really, every day that goes by from here on is another day that gets us closer to the recovery, because the stopping the spread, or at least slowing it, with everything that's going on now, with the sports leagues being closed, concerts, basically everything being shut down, it brings the spread of the virus to if not a halt, then again it slows it way down, and that's what you need. And the other thing is, in terms of a more serious situation with the economy, you need people's confidence to be heavily damaged. And I think the key is, while investors are, I believe, overreacting, I think overall consumers are going to come out of this with still a fair amount of confidence, although they may be more reluctant to get into the stock market. But we see that with every sort of downturn, where people don't tend to join in until it's made up a big chunk of its losses already.
Mm-hmm. Yeah, I agree with you. One thing that I would also note that I just really don't understand is that I see all these corporations cutting their buybacks now. And obviously they're worried about cash. There's probably going to be a lot of secondaries issued, and there's going to be some dilution in the stock market. But I just find it so fascinating that corporations are like the worst managers of their own stock. They buy back their stock at the highs, and then they stop the buyback programs when it goes low. The good news is, with all these banks now flush with credit, you can go out and raise more debt, raise more capital, which you can use to refill your treasury and then maybe announce another buyback program. But in terms of the V-shaped recovery, I would think that people are going to come kind of emerging out of their hibernation for who knows how long it's going to be, 2 weeks, 4 weeks, maybe, as long as a month, which we saw in China, and, engage in the same type of consumption habits that they had before this kind of temporary shock really hit.
Right, and think about it, now you're getting, if you're somebody who's carrying a lot of debt on your sort of personal balance sheet, if you will, now you've just gotten a break, a big one, actually 2 big ones, from the Federal Reserve, not to mention how cheap gas prices are now. Mm-hmm. And the other thing is, what we may see is that with the stock market and so many companies, stock prices have been knocked down. We may see a Warren Buffett or an Amazon or some company that has lots and lots of cash, lots and lots of cash reserves, come in and basically take advantage of these extremely depressed stock values and make some key strategic acquisitions. And if they do that, that also sort of basically brings a lot of buyers back out of their holes and say, oh, I guess maybe there are some values here. And again, that's the sort of thing you would see at a real bottom. And I think we might be close to that.
Yeah, I can totally see Buffett. Berkshire has, I think, $200 billion of cash on hand, moving into something like Delta Airlines or another, one of these tour operators or leisure companies that has been hit so hard.
Right.
So, one other thing before we go is that there has been some talk, some rumors perhaps, that the market will be shut down like we saw after 9/11. I worry about this. I know a lot of people who in the Wall Street community are now working from home. Their companies have kind of set them up with their own trading stations at home, so they can still keep the banks open and operating. And now the New York Stock Exchange is instituting really strict basically regulations about who can come on the floor, and they have to get tested to see if you have a fever or not. What do you think that means if the stock market closed? I mean, should you lighten up before it closes, or you think we'll open up higher in a few weeks?
Well, first, let me say, I do not think the market's going to close. I mean, 20 years ago, when there was a much more, human-driven presence on the New York Stock Exchange, and the only real alternative was the NASDAQ, I'd say yes. 20 years ago, like we saw with 9/11. But now, with so much of being computerized, and let's face it, I mean, the floor of the New York Exchange is really just a backdrop for CNBC and the other financial TV programs. So I don't think we're going to see that happen. I would be very surprised. The other thing is, when you look at the Trump administration, and of course, President Trump is well known to be using the stock market as a barometer. And for the market to close, it sort of robs him of that. So you can imagine that the administration might be very upset if there was some concerted effort to actually close the exchange, unless it was some true extreme in terms of, I don't even know what beyond this kind of extreme, that suddenly the computer systems are crashing and all that, and they have to reset it somehow. But I just don't see that happen. If it did, the key is, are you a speculator or are you an investor? I mean, if you bought a stock and you like it, like we have in my newsletter, for the dividend income, and because it's not just a trade for a month or 3 months, but you're looking out a year and 2 years, I don't see where you'd want to sell it unless you really felt like the economy of the country and the globe was so heavily damaged that we were going into the next Great Depression. And I just don't see that at this point because of the bazookas that the Fed and the banking system have brought out here.
Yeah, you're a great point. And I also don't think that the markets would close. But, I think we're still going to deal with extreme stock volatility. Yes. Prices are just going to go up and down a minimum 5% a day in the near future. So I think as an equity investor, you forget how volatile these times are. We've kind of been lulled to sleep over the last 10 years with pretty consistent returns and, only 5%, maybe 10% pullbacks here and there. We really haven't had a bear market. Essentially, we haven't had a true bear market since 2008. So I think, but in all these bear markets, there's no one who says, I wish I sold my stocks in the middle of the bear market. Everyone says, I wish I bought more stocks during that bear market, because the cycle eventually turns. There's always better days ahead, even though times are really rough right now in the stock market.
Yes, and I hate to say that the market repeats or that it's somehow predictable, but typically in these sorts of waterfall type sell-offs that we've had over the past 3 weeks to a month, there is a gigantic rebound. It just takes time for it to gather momentum. And in 1987, after the stock market had fallen, it fell 25% one day. I forget how big the decline was from the market top in August to the bottom in mid-October of that year. But within 2 years, it was making new all-time highs. Now, whether we go to new all-time highs from here or not, I don't know. But I know that again, typically you will see a huge rebound at some point once investors and Wall Street and the banks get a hold of themselves again.
Yeah, I think that's a good point to leave it for this week's conversation. On behalf of myself and my colleague, Jeff Yastine, I want to just send our thoughts out to everyone during the next couple of weeks. Stay safe out there, and we'll be back next week with your Market Insights video. Thanks again.